So this particular trade setup is what we call the Holy Grail setup, which if you've watched the Advanced Strategies course, it's the last setup we cover in the final chapter. This is the very best trade setup you could possibly take because of how many confluences are layered within this trade setup. And like it will always go to TP1, and most of the time it's got crazy moves that come afterwards. So I'll kind of break it down, and we're gonna start by looking back here before any of that stuff happened. So again, during our signals and markups chat during the mornings, we use the session crossover to look for our setups. So the green area is the London session, and as you can see, starting from the Asian session all the way through the London session, we've been trending down. We've also retested this level of support, which previously was resistance. We've retested that multiple times now. So we're essentially able to trap price, right? So get zoomed in here a little bit more. Too much. So with us trapping price here, we're just waiting for a breakout. So that morning, I was okay taking a short or taking a long. I just wanted to wait for trend change confirmation or trend continuation. So for trend to change, we got to break outside of this trend line. For trend continuation, we need to break below this level of support that we rejected multiple times. So as the US market started opening, oh, I didn't know you could buy and sell on the replay tool. That's kind of dope. So we got our break, we got a retest, and at that time I really actually didn't even pay attention. I wasn't on the charts like I wanted to be. I had some other stuff going on for other businesses. So that play out some more. That's not even accurate. So I ended up seeing price after we made that huge run up, which, you know, this was the perfect setup. You could have taken that all day, easy, no problem. But I didn't catch that because I wasn't paying attention. And it happened still technically during the London session, just before the US session opened. So the US session opened right here in this brown area. And we've got, you know, a decent trend forming here, if we include all of these. So all I'm waiting for is price to come back and retest our trend line zone, right? It just made that huge run up. We've got a lot of momentum. We've got a lot of imbalance in the market. You know, that's 1, 2, 3, 4, 5 5-minute candles in a row, just pressing like that. So we're going to have a retracement. So we'll wait for that retracement to happen. And there's where I call, well, when the candle was down there is where I called the trade. Let me go back and just put my trend line where it was. There we go. All right. We'll let that one play. All right, cool. So this is where I called that trade setup for you guys. And I'm going to break down why I called that setup to help you guys see this particular move so that it's easy for you to be able to spot it for yourself. Because these trades, you don't get a better trade. You don't get a more beautiful trade than this. I'm going to change my MA color so it's a little clearer to see. This red line is my 50 MA. 50 moving average. So for trend direction to change, because we were trending down, two things have to happen. We have to break our trend line, which we broke right here, but right here wasn't necessarily the best opportunity to get in. Had you gotten in, yes, you would have won your trade because it would have went back up to your highs, which are where you would have been targeting. But for a true trend change to happen, you have to not only break your trend, but you also have to break your previous level of structure. So our previous zone of structure was right in here, right? Because these were our previous significant highs. So price not only broke our trend, but also broke our previous resistance structure and our secondary resistance structure. It cleared both of those structures with, like, it just blasted right through them. So it's clear that we've got a lot of bullish momentum entering the market, and we're going to be looking for buys, but for a continuation setup. So as price came back down, again, we broke our initial resistance level of our previous highs. And, you know, anytime something breaks, it retests, right? We broke our trend line, we got our retest. We broke our structure, we got our retest. So price broke our resistance level and is retesting it to confirm for support. At the same place that price is retesting for support on our resistance zone, now turned support, you see our 50 moving average here. It's also testing our 50 MA. So not only did we break and retest our zone, we're also retesting our 50 moving average, and we're also testing our trend line zone. So now we're already at 3 confluences, right? So we've got our trend line bounce, we've got a break and retest, we've got our 50 moving average bounce, and you see these circles here. We also have our continuation divergence, otherwise known as hidden divergence. So price made a low and then a higher low, but volume made a low and then a lower low, which is continuation divergence, meaning that price is going to continue. So now we have 4 confluent events telling us that this trade is going to win and it's going to go long, right? And then we'll throw on a Fibonacci retracement tool here. And at the same exact level is the 618 of our Fibonacci retracement level. So we have 5 things screaming at us that this is about to go bullish. This setup wins 10 out of 10 times. That's why we put it as the holy grail. This setup doesn't happen that frequently, but it's, you know, you may get the setup once per week on each pair. But if you're able to spot it and take this trade, you know, you don't get a better opportunity than this right here. And then as you guys saw, if you took the trade, everything panned out. It ended up hitting take profit very, very quickly, and then ended up going like another, I think like 60 or 80 pips or something like that after that last trend line touch there. She just kept going. See what that is. Yeah, cool. So I think we had that like right in here. What kind of questions you guys have about that particular setup? I want so badly for you guys to be able to see this setup when it happens, because you can literally take 2 trades a week and make a crazy amount of money just trading this particular setup. And it's not even a strategy, it's just trading true price action and waiting for a bunch of confluent events to line up all in the same place. You know, feel free to take yourself off mute or just drop it in the chat, whichever you prefer. All righty, I guess we are all profitable traders and making money. We know how to trade. We don't need to learn. Okay.
Sorry, guys, I'm at work. I'm just kind of looking.
Oh yeah, you're good. Thank you for the heads up. So yeah, that's the main thing I wanted to cover on this. Like, trading isn't difficult. It doesn't have to be difficult. You don't need to zoom way in and look at candlestick patterns and try to figure out, oh, we got let's see if there's any. Oh yeah, we got 3 black crows right here. It's gonna go short. Like, trading isn't difficult. You just have to be good at marking up structure and being patient. If you're not patient, you're just gonna take trades you never should have gotten in the first place. And if you're patient, you're gonna be able to take trades that are gonna work out to your advantage in a really positive way. This goes back to the previous strategy, but do you prefer trend lines on the top or bottom of the candles?
Yeah, so I'm working and I'm coming in and out. So, but at
Oh,
the
you-
same time, I was listening earlier. You were talking about the difference between trend lines on like on the top of the candles versus the bottom of the candles. What when I'm looking, I thought it. I'm always looking to mark it up on like trend lines towards the top of the candles. But I mean, I again, I'm not necessarily I'm not necessarily. That was my question, I guess.
Okay.
It's
And you're,
not really, it's, yeah, so it's more of a channel, right? You can draw, there's not a right or wrong place to draw a trend line. Any
Yeah.
type of structural markup that you're gonna do, the goal is to include as many touches, wicks, candle bodies as possible, because that's gonna signify an area of importance. That can be either above, let me share really quick, Jack.
Yeah, go
Or
ahead.
that could be either above or below the candles, right? So like GU here, for an example, and the only reason I'm going back to this one is because I know I still have this marked up, right? Like I have 3 different places here where I have significant areas of touches. So right
Yep.
here, we're clearly in an uptrend. Price is making higher lows, low, higher low, higher low, right? So I have that here on the bottom only because I can clearly see a lot of significant touches. Right here, we have an order block. We come down, wick right off of it, another touch, and we're kind of hanging out right there in that area. This is operating as a level of support. Price is operating above that. But at the same time, like I can delete this right here, right? And only look at it this way and say, okay, I'm bullish until I get below these trend lines, and now I'm going to be bearish.
Yep.
But I trained my eye to see this as well, right? So when you add, how do I add my, all right, here we go. Right. So when I add this top level, right, you still see the touches. We got touches, 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 touch, wicked right off, right?
Yeah.
I am putting that there because clearly this is an area of importance. Price has rejected this area many a times. So this zone on top is now operating as resistance. No different than if I had a resistance level drawn like this and a support level drawn like this. Both are still support and resistance, no different here.
Okay.
Right? It's just the difference is this is at an angle. So what you want to do is learn to just visually recognize these area of importance, because this area started from back here on the October 26th, touched it on November 15th, touched it on November 24th, touched it right here on the first week of December 1st through like the 5th. So as once this has happened 3 times, let's say we're at this current point in time, right? I know that I have 3 areas of resistance in a trend shape, right? It's not like horizontal or it's not vertical. It's a diagonal dynamic structure. When this happens for a 3rd time, what do you think that I'm thinking is going to happen the next time it gets up there around that area?
Same thing.
Same thing until yeah, it's going to operate as resistance until price does this, breaks, retests, and then goes.
Yeah.
Right? No different than down here. What do you think happens when I see price getting here? I think that it's going to bounce and go long until it breaks, does this and that.
Right.
Right. And so what happened, this is a 4-hour. I always like to do this on a 4-hour, 8-hour, sometimes even a daily. But then when I go down into smaller time frames, I'm looking for more intraday to scalp type structure. So here's where I have this zone in the middle of these two. I got a significant touch here, touch, nice strong wick right off of it, touch. What do you think I was thinking when it broke beneath this? For sure, it would come down to my next level of resistance. It's no different than support and resistance. It's just not vertical.
Okay. Yeah, that makes sense.
It's just not horizontal. But ultimately, what it is a channel.
Yeah.
Okay. Whenever you're drawing it on both tops and bottoms, you're creating a channel. So most people, again, I was stating this a minute ago, most people newer to trading, they see that the market is trending down and they immediately look for a trend line, something like that, right?
Exactly.
The best thing to do is try to also identify the trend line's support as well. Right. And I don't use finite lines. As I was mentioning a minute ago, I like to use zones to trap price to get all the touches that I can. But clearly we're trending down, but you can still see that you have a lot of significant touches on the other side of this channel.
Mhm.
Right. So I like to just mark up both so I can see when it breaks out whichever way. Right. You can draw a trend line here. And most people, again, if you're trending up, they're looking for those. but look at the tops.
Yeah.
Right. So it's just about training your eye visually from a perspective standpoint to see both sides of it. That's all. Again, you don't have to use, like if you're trending up over like you are over here, for an example, you don't have to use this top zone. Most people don't. And if you're trending down, you don't have to use one on the bottom. Again, like my setup that I have for UJ today. The only reason I drew this the way that I did was because clearly we had a lot of touches right here. Touch. And then before I took my entry, we had our third touch. So I was like, okay, this is an area that price is rejecting. Let me just draw it up here so I can visually see how price then reacts to it. Right.
Yeah.
But this right here is a level of support, this trend zone, no different than this level of support that's horizontal.
No, that makes sense.
Yeah. So again, it's just about visually getting it on the chart, because the more less is more, but the more structure that you have identified, the better prepared you can be to react to price. Because before price did what it did, and again, I used other context to help determine my bias. But when price was right here, for an example, there was a lot of things that price could have done, right? But because visually I can see all of my structure, I have a really good idea of the possibilities. Price could have bounced here and came all the way up to here and done, just stayed in there for a little while. Price could have done what it did, which is the trade that we call broke and then trended down for newer lows. Or price could have come up, broken through this zone, retested, and then continued to make highs. Those are the only things that it could have done, right? But to very quickly and confidently know that those are the three options, that's hard to see if I don't have anything on there.
Right.
Right now, I'm like, okay, I have no idea what this is doing. So the goal is let me try to identify a lot of structure. Okay. And like this support zone, I have touch, but look left, resistance. I'm confident in seeing that as a structural zone, right? Then I look at the tops. Okay, we got a lot of resistance in here. Price hasn't been really breaking. Okay, I'm confident to see that as resistance. And then this right here is just an extra thing that I added. Again, you don't necessarily need it, right? You don't necessarily need it, but for me and how I like to trade, I like having that visual there. So I'm like, okay, price can do one of the three things that I just showed you. So then I start messing around, excuse me, I'll start filtering through different time frames to help better create that narrative of what I think is happening.
Right.
To make that decision. But visually, all this is for visual sake, to give me a confident analysis of, okay, if we get here, it's going to react to these areas.
Right. And so that's, yeah. Yeah. I'm good. I appreciate it.
Yeah, no, good question. I want to go over something else really quick too, Zach. I don't know if you had another thing you wanted to cover, but I wanted to talk about, for those that were on the call Sunday.
Oh yeah, bro.
Let's take a look at, we literally called this to a T, and I kind of want to show you guys what I'm seeing now that could happen. So if you guys were on the call Sunday, I know a few of you on here were, this is the weekly time frame. Let me move this Zoom thing. Y'all can't see it, but I keep having to move it because it's everywhere in my way. This is a weekly time frame. Okay. This candle represents this week. In 1 hour, 23 minutes, 45 seconds and counting, this candle will close permanently. And then Sunday, when the market opens, a new candle will form. So on Sunday, this current candle that we see was small. Nothing had happened because the week hadn't started. But if you look at the previous week, we said, hey, I'm pretty bearish biased this week because this is a huge bearish candle that engulfed the three previous bullish candles. It closed right there, which is beneath all the bodies of these candles. Now, the way price works, it doesn't just close and usually tank, right? Zach and I verbatim said that they would throw a wick up here. Now, I'll be honest, I didn't anticipate it to wick as high as it did. I anticipated it to test kind of right in here in the median of these highs and then turn around and end bearish. And price did exactly that. Literally to a T. Threw a strong wick up there with the news. Fed interest rate decision came out, which was strong for the dollar, which means asset classes with the US or with the US dollar was short. And then that's what it did. But now that we've seen this happen, right? We've seen how this has played out. Look at the structure that we currently have forming. So we clearly have a nice resistance zone here operating in the trend direction. We got wicks. I included this touch here because, again, this is a weekly time frame. This starts back on January. This is the entire year, right? So I could have, done something like this because I still get 1 touch, 2 touch, 3 touches. But again, when you're drawing structure, you want to get as many touches as possible without being exaggerative like that, right? When you exaggerate your zones, this is a big move that you could miss. So it's about being precise, but at the same time, just kind of aware of what price is doing. So the reason why I came to here is because this gives me this extra touch right here. And see, this is in February. This is back in January. So that's a 3-month time frame. I wanted to include that wick. So I got touches here, 3 weeks that it touched, bounce right here. Here's a week in March. Here's another week in April. And then here's our last touch before we broke it with a nice, strong bullish engulfing that broke through. What happens when structure gets broken? It retests. Okay. Now that doesn't mean next week we're just going to turn around and fly out for new highs. This is a weekly time frame. This stuff takes time, but I will start to show you a top-down analysis of what I think that could happen based on structure, not based on any fundamentals. I have not looked at the news for the next 2 months of what's coming out, but news can make US 30 do whatever it wants to do. But simply going off of structure, we have a trend line resistance that was broken and is currently being retested. Drop down to the daily, you're going to see the same thing, right? Beautiful trend line, a lot of touches. It's broken, and now we're operating in it. Now, I think before we turn around to continue long, we're going to get lower into this zone, right? This is the very first retest of it, and it's pretty weak at that. I think that we will see some type of candle closes within this zone before we actually make a true turnaround, if that's what we're going to do. Now, let's keep dropping down, though, because I want to show you how precise when using these zones, you can use time frame confluence to get snag entries for scalping and things like that. I typically always draw my zones based on a 4-hour, 8-hour. This one particularly I did on the weekly because it's relevant at the time because we just recently broke this and we're now currently retesting it. So the next 2 or 3 weeks, I'm really curious to see how this plays out. But from a scalping perspective, when we get down to this zone, and you guys have just seen why I identified this zone as an area of importance, right? Look at here at the 1 hour. Price came all the way down to bounce right off of this zone. You got low, lower low, lower low, low, lower low, lower low, low, higher low, higher low. What is that called? Divergence, right? This is reverse divergence. This is indicating on a 1 hour time frame that odds are we might get some type of reversal. That does not mean we're going to reverse the overall trend, which in this current time frame it's a bearish trend, and all of a sudden be long. Because what did Zach say? We just went over this. In order for a true trend change, you have to break trend and break the previous high. Okay. Reverse divergence just means a pullback. Okay. So this is indicating we're making lower lows. The oscillator's making higher lows. We may get some type of turnaround. And especially off of an area like this, I'm going to be much more confident to take it because this area on a larger time frame is a significant zone. Look what happens when you continue to go down in time frames. You still get, now you have more divergence. Low, lower low. Extreme divergence here. Low, much steeper, higher low. Okay. All the way down literally to the 1 minute. And then you can find, this is where you start to snipe those scalping entries, right? This is where you really begin to snipe entries. Now, I'm never on the charts at, this is 1:30, especially on a Friday, looking for trade opportunities. But the point of me showing you guys this is how you can, from a top-down analysis, structure that I marked up based on the weekly, and I have the exterior border of this zone simply based off of wicks. I got the very highest wick into this zone, and right off the body of this, or excuse me, right off the tip of this wick, just trying to get as many touches as possible. We broke it. We're coming down to retest it. So in that retest, if I think that price is going to turn around and buy here, I need to start looking for reasons on the lower time frames. And you get a perfect reason right here with hidden divergence. You see the same thing on the 15-minute with hidden divergence. And then on a 1 minute or 5 minute is where you would begin to look for some sort of sniper of an entry. right? Let me remove some of these so you guys can see it a little bit clearer. The 5 minute still has extreme divergence as well, right? You got lower lows, but the whole time from the very first low, you started trending up with higher lows. So then you're looking for some structural break to confirm entries to go long. But I just wanted to cover that really quickly because Zach and I literally said this week that, I mean, the call is recorded as well. Go look in our, if you look
It's on
in the
YouTube and
Discord,
on the Discord. Yeah.
yeah, if you go into our live Zoom calls, this video right here, if you watch it, you will hear us say verbatim that this candle that you currently see would look exactly like that it looks right now to a T, which is crazy. So now coming into next week, you kind of have an idea of what I'm going to be looking for. Again, I don't think next week just automatically turns around and bounces right here, but I do think that we're going to start seeing some sort of reaction into this zone here. Now, if we get a couple closes below this zone, I'm going to be really bearish again. I'm going to have a really extreme bearish bias because in actuality, one more point to note, to change trend, you have to break the trend and the previous highs. Officially, we had some closes above this previous high here. 1, 2, and then we came right back down and then wicked it. To me, this is not a true break of structure. Okay, this is not a true break of structure. If you've been on our calls before, let's go back to the UJ example really quick that Zach was reviewing. If you want a confident confirmation of a break of structure, you need momentum. That is the key in structural breaks. Look at the difference in this high being broken. Strong. Now these wicks tell a story. Bodies tell a story. What do you notice about these candles right here? Bull, 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 bull. Very strong bullish. And if you look at the bottoms of these candles, hardly any wicks. So here's what that means for some of you newer people. A bullish candle opens at the bottom of its body. So when this bearish candle, when this is a 5 minute time frame. So for 5 minutes, price went up and down, and then it closed right here. As soon as that 5 minute timer hit 0, this candle started. Sellers pushed it down to where this wick is, but buyers ultimately pushed it up. And then this candle starts. What do you start to notice? Sellers are very inactive. They can't push it down. Very small wick, strong push up. Where are the sellers at? No wick to the downside, strong push up. No sellers here. There's no wick. Price at when this candle started, price never came within this candle body. It just pushed up immediately. That is called momentum. Buyers are really overtaking the market, and they're doing it straight through this level of structure. Okay. If you go mark up any strong or any break of structure, a true break of structure, you're going to see that type of momentum in the market. Look at this little trend zone here, right? If I go down to a smaller time frame, it'll look even better. Strong bearish. Like that's a break of this little pennant trending up. When we look at US 30 currently, you go to the daily, or you go to the weekly, I don't see strong momentum really carrying price through this level of this previous high. All I see is that price went up to test it, trended up, trended up, trended up. If I put a horizontal line right here, see how let me come down just a little bit. See how these are fairly equal, but this is a lot steeper. That is still technically divergent. Google is going to classify it as exaggerated divergence, but this is divergence. Price made extreme higher highs. Our momentum in the market didn't. And that's why we're turned around off of this level. Okay.
Go back to the previous high where your line at the top is, that it's even divergent from there to the
oh yeah. Because this is technically higher. I see what you're saying. You're talking about from here to here.
Yeah.
But if you look over here, you're here to here.
Yeah.
So that's why we're pushing down right here. I need to see a lot of momentum in the market breaking past this before I'm like extremely bullish. Hey, we're going to start making higher highs again. The economy's turning around. We're not in a recession. That realistically probably won't happen for another 1.5 to 2 years when the election time comes back around.
Yeah.
That's just how the market works.
And to build off of that even further, they just raised interest rates on a Wednesday again by 50 basis points. So what that means for the US dollar is it's going to continue going bullish for the next quarter until the next updates on the interest rates come out. So if that's the case, then all of our asset classes are also going to continue shorting for the quarter until the next interest rate decision comes out. So
right. So
things
you
like
may
US
see
30. Go ahead.
No, I was just adding on to that. I was gonna say for like the next 3 months, you're probably gonna see this be bullish. That's all I was gonna say. I didn't mean to cut you off.
Yeah. So then we're gonna have a short bias to all of our asset classes like US 30, all cryptos, SPX 500, NASDAQ 100, gold, any of the precious metals, oils, all of that kind of stuff, because now that the interest rates are higher, it's harder to access the US dollar. It costs more money. It's more expensive to use the US dollar because the interest rate on the dollar is so much higher. So when you look at taking out loans or credit card debt, or one country doing business with another country, it's more expensive to use the US dollar. And the reason that's important is because the US dollar is the global reserve currency. It's the basis for all currency on the rest of the planet. So the fact they just raised it another 50 basis points is going to continue forcing the Dixie up. And anything that has USD at the front of the currency pair is going to also go long. Anything that has USD at the end of it is going to go short for the foreseeable future.
Hey, here's another really good example of what I mean by momentum breaking structure, right? This trend zone, look at this candle, right? That's a solid break of this trend line. And another point to make off of this, this may not be the best example to see it on, but let's see, one of the reasons why I use these zones the way that I do, because if I just used a line, let me make this darker just for this example. If I just use the line coming off of 1 touch, 2 touch, 3 touch, I used to trade with just trend lines, and I would lose a lot of times right here for being too aggressive, because I would get faked out thinking, okay, hey, we just broke it. Oh, hey, we just broke it. And it happens even more on lower time frames, especially if you're trying to scout things. But it's very easy to get psyched out when you break just a line. So I had to learn to understand the market is a zone, right? So let's say once it bounced here and broke and continued into its direction, which this is a good example here as well of everything that we've kind of talked about. Divergent, right? So it bounces in this area, it breaks. Again, I'm doing this from a daily. If you go down in time frame, this is going to be structure. We break this and continue to make higher highs. So that just was a continuation bounce. However, a lot of people could have gotten stopped out, or excuse me, got chopped up here by using a trend line. Once this happens and we push back up, I include these wicks, right? I'm including that into my zone, because this wasn't actually a trend change. This wasn't anything but just the test of a zone that I couldn't even see because it wasn't identified yet. And then we come up in here, we bounce in our zone, and then check this out. We come up right here, we close beneath the zone, close right back above the zone, and then boom, momentum. Again, momentum. If you want to have a lot of confidence that structure was broken, look for a strong candle to be the thing that's doing it. And then if you would have taken a sell right after that, I mean, price went, I never trade the Dixie, so I don't even know what this is. I guess 440 pips. Right? But look for momentum breaking your zones, whether they're horizontal, whether they're structural. Like here is my EU markup. Here is my EU markup. Let's see, look at the zones that I have. I've had these zones on here for a while now, right? So I had a touch, 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 touch. So I have my trend line zone coming up in here. And at some point in time, this zone will become relevant again, I'm sure. But if it doesn't, I'm not too worried about it. This top zone I had, because I had a touch here, a touch here. Well, look, this was once support. Price was bouncing on this. We broke it, come up and retest, come up and retest. Then we break back above. Now it's support again, right? So that's all you're trying to do when you're drawing and marking up your charts. You're trying to find the areas where you can get as many touches as possible, right? So right here, when we broke this trend line right in here, we came down, bounced our trend line that we already had existing touches off of. Then we broke through. What do you think I was looking to do right in here? I was looking to buy, right? I was looking to buy. When I'm on the tops, I'm looking to sell. When I'm on the bottoms right here, I'm looking to buy. Your goal as a trader, there's only two things the market can do. It can buy and it can sell. And your goal is to sell as high as you can. I want to sell at the highest price. I want to get more for what I'm asking, right? If you were selling something at a yard sale, start high, watch and buy. Your goal, if you're selling anything, is to sell it for the most you can get. And in terms of trading, I want to sell way up here. In terms of buying, I want to buy it when it's cheap. So understanding that concept, when you have support and resistance, again, whether it's a trend direction or whether it's horizontal, your goal is to sell near resistance and buy near support. Okay, when you understand that, then how do you make that happen? How do you execute that? Well, when a larger time frame such as the daily gets to an area like this right here, I start looking for clues. So there's no real clue right here, right? There's no divergence. No divergence. Okay. All I know is from this time frame, the only confluent event I had that says buy is it was a break of this trend line here coming down. We broke it and now we're retesting it. And we're retesting it right on this same trend line that we have going up. That's all the confirmation I have though. But as you start to go down in time frames, we start looking for a story to be told. Okay. In here, I'm not seeing anything crazy as far as divergence goes. I just see that I'm in this zone that I have. I could do something like this right here, right? I could look for this little area right in here, right? And say, okay, so I have this little area of resistance, a little baby area. But again, that's all I really have to confirm anything. What does the hour say, right? And you just keep working your way down to build this story because price is telling you a story, right? And your goal is to help narrate that and understand what it's trying to do. At this point in time, still nothing significant right here saying buy, right? Not really, in my opinion. Okay, keep working down. So for two whole days, price operated in this zone. Now, obviously, when you get smaller in time frames, they all kind of start to overlap. But it was at this point in here that we had a lot of momentum push off. This might have been news, I don't know, but that's a huge momentum candle, right? Again, look at the candles for the last 2 days. Okay, small body, little bodies, some wicks, really indecision. I mean, just kind of sloppy. But then when you get this, look at that. Boom, big momentum candle. That gives me a lot of confidence that it doesn't want to go beneath this zone. It's saying I'm ready to get out. And at that point in time, it turns around and it never comes back. I mean, from right here after these strong bullish candles that entered into the market, that's when it really turned around. Now, a lot of people want to get that textbook entry down here, and there's nothing wrong with trying to do that. But I'd rather be a little bit late, getting in somewhere over in here and be right. And the best entry is even right here, technically, right? Because you get past all of this consolidation, you get past this trend, and you bounce right off of it. You're still not late to the party, right? If you bought right here and rode it, I mean, that alone is 285 pips, but price went 435 pips in 4 days. Now, granted, I'm trying to become a trader that I can hold a trade for 4 days. I'm struggling. I don't want to say I'm struggling, but being 3 years in, I'm ready to migrate to more of a trader that can hold something for 4 days and make 435 pips. That's what I'm working on. That's why most of my structure at this point in my career is all marked up based on higher time frames, because the reason I like to scalp an intraday trade, I'm learning that the best way and most effective way for me to do that is to look for the entries when I'm on a larger time frame area of importance, right? So when I see that the 4 hours getting down in here, that's when I'm going to my 5 minute and looking to try to stack as many entries as I can. I've gotten good at doing that. Where I'm bad is getting an entry right here and being able to hold it for 14 days. I'm not there yet. No telling when I will be, but I'm working towards that. And then the last thing I have, I forgot to mention this when I was looking over here at US 30 really quickly. So we have this break of this trend line and we're retesting it. When I turn on my other moving averages that I have turned off currently, check this out. When I go to the daily, so the yellow is a 5 moving average. We just crossed the back above the 34, which is the blue one. Those are the two primaries that I leave on all the time. This other is the 89 and 200. Take a look at the daily right here. The daily, right? So we broke my weekly trend line structure. Price broke back above all my moving averages. And look where it's retesting right at this exact moment. Right off of the 89 and 200, which is why we're getting this sort of a wick right here right now. We're rejecting off of that area right now. So next week is going to be a really interesting week. I'm excited to see. I will say forefront of things, I probably won't take a ton of trades next week. I don't normally trade that much around the holidays, especially with Christmas coming up personally anyway. If I do, I'm extremely under leveraged and I'm very conservative, but it's never, I've been trading for 3 years and this time of the year, I've never traded. Q4 things start to slow down usually. But I got into trading to be able to have the freedom to do what I want when I want. And there's nothing more free than being around with the family for holidays instead of being on the charts every day. So that's what I will choose to do. But I am going to keep an eye on this next week because this is going to be interesting to see how this plays out, right? Currently, the way that it's set up, one or two things can happen, right? We can bounce or now, again, this won't happen next week, but these lower time frames will begin to tell us the story to give us an indication on a 15-minute or maybe a 1 hour or 4 hour what the next coming weeks will do. Okay, and that's what we're going to be looking for is what is price telling us that it wants to do, right? Currently, we're bearish right now because we made our highest high and then we broke previous lows, right? We broke all of this support, which was once resistance over in here. We broke all of that. Okay, and now we're underneath this. So price is telling me that we're bearish, but we're right on top of this retesting. So like if we get back above this area right here, I'm gonna expect to see continued buys. But based on what they did with the interest rates, I don't suspect that should happen. I suspect that we consolidate down in here, especially through the holidays, right? The week of Christmas, we may just be choppy right in this zone. And then first of the year, we may get a pushback below to start making lower lows, or for some reason, I don't know, they come out and say something and it goes long. We don't know yet, but I just wanted to show you this other confirmation here is price is about to retest. The black line is my 200, right? See this black EMA? That's the 200 moving average, which is a pretty significant one in the Forex world. The daily is wicking right off of that. So keep your eyes on that pair because I know everyone likes to trade US 30 to see kind of how it shapes out next week. But just another level of confluence that I wanted to share. Like we broke this structure, we're retesting this structure. We're also retesting the 200 at the same time.
And then I'll add 2 or 3 things onto that too. You know, not even US 30, but just the market in general. It's December again. So, you know, we're right before the holidays. The same way Jamal was talking about not really looking for trades. The large financial institutions that move the market also are doing the same thing. They also have families. So there's going to be a lot less volume. So we're going to yield less setups because there's not going to be as much movement in the market. But I don't want that to discourage anyone because I want to point out something. I actually just posted it in our Discord community in the signals and markups chat, right? We only called 5 trades this week. That's it. You know, that's one of the you know, lowest trade volume weeks we've called trades with since we launched Candle King's community, right? But all of those trades, we called 5 trades and we lost 1 of them. The other 4 were winners. The first trade we called for this week, we went UJ long and we netted 31 pips, which was a 1 to 2 risk to reward. EA, we called short for, we hit stop loss at 9.4 pips at a 1 to 2 risk to reward. For EA, we entered in that trade right afterwards because it was just a fake out, and we won that trade for a 1 to 2. Oh, I put 1 to 12. If only. And then Then we called UJ long for 318 pips, which is a 1 to 8 risk to reward. Then we called UJ sell for 48 pips, which was a 1 to 2 risk to reward. So we took it very easy this week. We only took 5 trade setups. And if you took every one of these setups at only 1% risk, you're up right now 13% on the week. That's insane.
Crazy.
So you only 5 trades and you're up 13% for the entire week. So you don't have to take a lot of trades to make a lot of money. So as we enter the holidays, like Jamal said, we're gonna be very cautious and we're gonna be patient and wait for really good high probability setups. So we may call less signals, but that's just because of the volume in the market. So that's one thing I wanted to point out. The next thing I wanted to point out was for the dollar. Just because the interest rate decisions came out. Let me go to 2 screens. I'll start here and then I'm going to go to 2 screens to show you what I see happening. So for the US dollar, we've got our alpha trend and then we have our mini trend, right? So our alpha trend, we've got quite a bit of room to move up there to test that. And then for our mini trend, we actually just broke. So we just broke and retested right outside our mini trend right here, right? So our trend line zone, we broke it, we retested, and it's starting to push up again. And the reason that happened is we've got quite a bit of divergence. We made let me grab this guy. We made a bunch of lower lows, but our volume made a bunch of higher lows. So typically that's going to happen when you're going to be reversing the trend, when trend is going to be changing. So we've got all this divergence, we broke our trend line, we've retested it, and we're starting to push up. So what I'm waiting to happen is, go to UJ. I can change different time frames, right?
Yes, you just got to click on the specific chart, left or right.
All right. Oh yeah, it's already on the 5. Perfect. So this is setting up exactly the same way that UJ did for that trade we called earlier this week using the Holy Grail setup. It's setting up exactly the same way. Right here. So we're trending down, trending down, trending down. We break outside of our trend line, we retest, we consolidate a little bit, and then we get our crazy run up, right? So we break outside of our trend line, we're consolidating a little bit, consolidating. So what I expect to happen next week is going to be this right here, or maybe not even next week. Maybe that consolidation ranges through the rest of the holidays. And then like January 2nd, January 3rd is when we're going to see this right here. But I expect that same exact thing to happen because in order for this trend to reverse, which it's likely to because of the interest rate decision, there's no reason that the US dollar should now be in a bearish trend. So it's going to make that run up. But for us to have a true trend change, we have to break above this structure right here. This is our next area of interest, right? But in order for that big break to happen, we have to have some type of really volatile, huge momentum type of move to be able to break through that and confidently start looking to take buys on any pair with USD in the front and shorts on any pair that has USD at the back. So I just wanted to point out that correlation there. This is literally on the 4 hours setting up exactly the same way that UJ did. So what I would like to see is for price to make that bullish run, break through our zone, pull back, and give us a, on this trend line right here. We don't really have enough structure to draw our trend line zone yet, but once we get some more structure here, we can draw our trend line zone and we'll get a bounce on the trend line zone, a bounce on the 50 moving average. We'll have some continuation divergence and a 618 or 50% retracement for us to start looking at taking buys. And again, we're not going to trade the Dixie, but any pair that has the Dixie as the pair in the front, we're going to be looking to go long, and any pair that has USD at the back, we're going to be looking for shorts. So I just wanted to point that out there. Got another chat.
Really quick, zoom out on that Dixie side really quick. I want to show them one thing as to like why. Like you zoom in just a little bit and kind of stretch it up a little bit now. All right. Now on your left chart, add GJ and go to the 4 hour really quick. I just want to show them like why price needs to break that red structure that you have and not just the trend line. GJ. Okay. So actually, it's going to be kind of hard to explain, but erase everything that you have on GJ or like some of the stuff that you have on there. Yeah, and then do that zone. And then so the highest high that you have on GJ, keep going. Nope.
Oh, I
Scroll
see.
back right there. Draw a trend line down to that next high. Nope, the one before it. Yes, because I called a trade over here. All right. Now draw your resistance level based off that second touch of the trend line. Yep. All the way across there. Right. So look, if you look at GJ and you look at the Dixie, where on GJ, where the price broke the red trend line, that's where we are on the Dixie right now. Price has just broken this trend line. But look what GJ did when it got back up to the previous high. It rejected, just like US 30 is doing based on its previous, the previous high that it has. This is why you wait for it to break that level of resistance. It broke trend. Now let it break the previous high and then get in on that 618 retracement. That is the trade that you will win 10 out of 10 times. That's the trade that UJ, he called this week on UJ. When you're looking at it, it's identical to this setup. This is what happens in the market over and over and over again. When price breaks a trend, you need to wait for it to either one, reject the previous high, like you see over here on the left on GJ, or like what UJ did, it will break that high, come down and retest it, give it a 618, 786 retracement, and then now you have a true trend change. Right. So I just wanted them to see, because you were showing them how the Dixie is lined up just like UJ is right now. And I wanted them to see an example of where, hey, GJ was lined up exactly how Dixie is right now, but it never broke those previous highs.
Yeah.
So it just bounced.
And it could very easily come up to this resistance
Very easily.
and just go short again. So what I'm waiting for is for that nice huge run up and then get in on the retracement for the continuation back up to this zone.
Right.
So that's, you know, my analysis, but it's just an opinion. So we have to wait for the market to form structure and let it play out. So we'll just look at that as the market plays out.
But to Zach's point, fundamentally speaking, it should continue high. But again, I just wanted them to see an example of where it can reject as well, because that's very possible.
And then Jason asked, I remembered you guys mentioned 5 touches or more on support or resistance raises the risk of breaking those lines. Does that also include trend lines? It includes structure. It doesn't matter what type of structure. It could be a moving average, a trend line zone, a trend line, support, resistance. It doesn't matter what it is. The more times price test a zone or level, the more likely it is to break that zone. So if you get between, you know, 3, 4, 5, 6, 7 touches on a trend line or a resistance level or a support level, that level is most likely not going to hold. So you know, we've got 1 touch, 2 touch, 3 touch, 4 touch, 5 touches. We've got 5 touches. UJ could find some support here, and then we get our actual break because we tested that level 5 times now and failed to break it. So, you know, that holds true. It doesn't matter what type of structure it is. Trend lines, support resistance zones, moving averages, everything. You know, the more touches you get, the less valid that structure is. Yeah, look at it go already. Look at her go. She's cooking. I'm telling you, next week, or like, you know, within the next like 2 or 3 weeks, it's just gonna go crazy. But cool. That's all I've got for this call. If anyone has any other questions, throw those in the chat or unmute yourself and ask away. If no one else has any questions, then we'll just wrap it up for this week. But I mean, awesome week, guys. We fucking crushed it. Only 5 trades, 1 loser, 4 winners for 13% gain. I don't know what the total pips are. We'll see what the.
That's badass though.
I mean, it's
5 trades, 13%.
22, 31 minus 9.4. So we made 409.6 pips this week, which is fucking awesome. So great trade, great week overall on the charts. And, we're gonna do it again every week after this. We just gotta be patient and wait for good risk to reward setups.
Yes, sir.
Any other questions? Oh, we got another chat question here. 409, sheesh, I know, right? Sheesh, 409 pips, baby. No, it's 409.6. Don't leave off that 0.6. Hell yeah. Awesome. Well, I don't see any other questions in here. No one's taking themselves off mute, so we'll wrap it up. I appreciate you guys getting on the call. Hopefully you found some value in this. And again, just so you know, for those of you that haven't been here, we do these calls Sunday, Wednesday, and Friday. Sundays we do at 9 p.m. Wednesdays we do at 9 p.m. because we know like people typically work. So we try to accommodate schedules. And then Fridays we do at 2 p.m. Central, just to recap the week and answer questions for the Q&A stuff. So if you're able to get on the calls, make sure to make those because we're dropping gems on here, and this is our opportunity to really spend quality time with you guys, for you to be able to use us. The purpose of these calls isn't for us to for Jamal and I to get on here and just talk. The purpose of these calls are for you to use us to help refine your skill set so you can be a better trader and a more effective trader, so that you don't need to be a part of our Discord community. You can go start your own community, or you can just trade for yourself and make a ton of money doing it, and we don't have to hold your hand. So I'll leave it there. Jamal, if you've got anything else you want to add or anything
No,
else.
Yeah,
I gotta run. We got like a bunch of girls coming over. Lindley's having a sleepover tonight, so I gotta help get the house set up.
Okay, yeah, that's
I'll
perfect.
catch y'all later.
Okay, and Quasi, what were you saying?
I was like, hell yeah.
Oh, hell yeah. Hell yeah. Awesome. Well, I appreciate you guys. Enjoy the rest of your weekend. Don't get too crazy, and we'll catch you guys on Sunday.
See ya.
Awesome. Take care, guys.